There we go. All right.
Ready.
So you took it right around here. That's kind of similar to where I took it, right? Saw a very similar thing, right? We saw that we came and induced this external liquidity right here,
Sure.
right? And then I originally took two losses here. I took a loss here. I took a loss here. And then I entered one more time right here and eventually recovered, right? And was able to
Yes.
hold longs all the way through here, right? It's important to really understand that psychological edge, right? Like understanding that we might lose, once or twice before getting in the real position, right?
This is where I took the mine.
So that's always important. Exactly. Yeah. That was a good one.
And
And I
I
know
also took a loss here. I was going short, trying to go for the continuation to here. Yeah, so I took this loss, but then I recovered here.
That's good. Awesome.
So I'm seeing it very clear how you're trading, and I think I'm getting.
Awesome. That's good.
Also, the candle structures and what you're seeing in the 10, in the 13, in the 15 minute makes it more clear. No,
you're right.
So ready for what we're looking at today. Then we're going to see more refined entries or something.
Absolutely.
Similar,
So
no?
today we're going to be talking about, right? So our first three lessons, right? We went over injections, right? And the next lesson we went over algo structure, right? And in the last lesson we went over like the daily cycles, right?
Yes, the third lesson.
So today we're
Okay.
primarily going to focus on 10-minute entries, and I also want to talk about external, the three different types of liquidity, right?
Okay.
So now that the session is recording, right, what I want to talk about is external liquidity, right, which I'll have marked out in green, right? These are primarily going to be used for reversals, right? This is also commonly known as major inducement in the market. Then we have internal liquidity, right? There are two types, right? We have internal previous day liquidity, which I will make red, and these can be used for reversals or continuations based on high time frame bias and daily cycle, right? And then we have internal same day liquidity, gray, which is primarily used for continuations, right? And rare occasion reversals, right? And this is something you're going to be able to see constantly through breakdowns, right? So I kind of want to go through some examples here and show you how to mark out this type of liquidity, and then how we're going to enter, right, entries based on the 10, the 13, and the 15 minute, right? So we also want to learn today the refinements on the 10, 13, 15 minute. All right.
Beautiful.
All right. So let me go ahead and do this. I'm trying to figure out the best way to show you right now. Right. So the way that I want to find my complete external liquidity, right, is kind of just to look at the extremes of price, right? Kind of see where price is having an external edge, right? Anything around these edges of price is all considered to be external. Now you're probably wondering, how do I kind of track that on a day-by-day basis? How am I finding that external liquidity, right? Majority of the time, you're either going to find your external liquidity on the higher time frames, right?
Mhm.
From structures such as here, right?
Mhm.
And or if you're trying to find the more recent external liquidity, right, we're going to be looking at the previous day highs and the previous day lows. For
Mhm.
example, if we look here, this is a previous day high, right?
Mhm.
And this expands up to here. And then this expands up to here, another previous day high. And as you can see, we eventually short from
It's
it,
okay.
right?
Mhm.
So what can we also understand from the sell side, right? We can also understand that this is a previous day low, right? So this is
Yes.
external liquidity. This is
Mhm.
external liquidity. And then this continues to be external liquidity. Now it's important to understand same day external liquidity can be used for reversals and continuations, right? Anytime we are trading same day liquidity, right? Regardless if it's external or internal, right? Same day liquidity a lot of the time is going to be continuation such as here, right? It's just the way that it is. Now looking at it, right? Well, where's the external liquidity here, right? Well, this is a previous day high. This is a previous day high, right? So we know that all this is considered external liquidity and we're most likely imminent for
Even though
reversal.
it happened many days ago,
What's up?
does it maintain?
What?
Even if this happened like 3, 4, 5, 10 days ago, does it maintain as external liquidity?
Right.
Okay.
We can, but here's the thing, we can also find the external liquidity from over here, right? This is a previous day
Mhm.
low. Well, first of all, I want to show
Yes.
you how I'm finding these previous day lows. Do you see the
Okay.
dotted lines that I have up?
Yes, it's the session breaks, no?
Exactly, right? And
Mhm.
that is bringing more external liquidity, right, into the market.
Mhm.
All right. Now, what can we understand from here? Right? This is a previous day low. This is all external, right? This looks more relative, right? We can kind of combine it with this over
Mhm.
here, get rid of it just for clarity, right? We understand that this is a previous day high, right? We can expand that out and then look how the liquidity starts to expand.
Mhm.
Now, let's do the same thing over here. We can see that this liquidity expanded down to here, which expanded down to here, which expanded to here, and then
Mhm.
eventually expanded to here, right? So from a buy side perspective, right, we can understand that anytime we have cut external liquidity, here, 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 there's the possibility of what? Buying,
Mhm.
right? What's the difference between current external liquidity and external liquidity from the past? Current external liquidity is going to have a less powerful reaction than the current liquidity. I mean, than the liquidity from the past, right? Time and price. The further
Okay.
away it is, the more likely the liquidity is larger, hence the larger the move, right? So this buys right here are very powerful buys, considering that the liquidity here is building up for a long time, right? If we come back to this liquidity point, this sweep right here, right? We
Mhm.
can see how this produced such a large move, right? How the
Yes.
liquidity from the past then eventually combined with the external current liquidity, causing it to start shorting off,
Mhm.
right? It's almost fair to say that after this sweep right here, we can expect price to just continue and continue and continue, right? Until we hit another major form of liquidity, right? Now, where would be our next liquidity points from a major standpoint? This is external. This is external.
Mhm.
And this is external. And we know what our most powerful external area is here. So most likely our most powerful reaction will come here. How else can I track external liquidity? Trend lines, right? Find where the external liquidity has started, right? Such as here, and draw it from one point to another, right? This would be an
Mhm.
example. And then this would be another example.
Mhm.
Now, can you see that we have almost double the confluence here, where we have this trend line coming in,
Yes.
right? We can clearly see that it's been respected once, respected twice, manipulated down, right? Here's that manipulation,
Mhm.
right? Here's the manipulation of the inducement lows, right? So we know what? That we're probably going to get very powerful entries anywhere in this area here.
Mhm.
Now,
Yes.
I've put on my story yesterday that it's very, very, very possible to do what? Right? It's very, very possible to trade everything that's going on, right? If we look just at the external liquidity, we can see that we would have caught moves here. We would have caught moves here, here, and here, all based off of the
Yes.
external liquidity, right? Those are the highest
Right.
probability
Mhm.
moves you can grab, no question. But when we start moving into the internal aspect of liquidity, right, it gets a little bit more difficult, but then you're able to really see how the market is intended to move. If we come intraday here, right, I want to mark up all of my internal liquidity. I see that this right here is all internal liquidity for this day. If we remember correctly, right, we understand that everything of the same day is what? Same day internal liquidity does what? We look for
Continues.
continuation,
Mhm.
right? The way that we want to look for these continuations, right, internally is first of all, we understand from the external liquidity, the high time frame bias, that we are short. All right, so we know primarily for the day to look for shorts. On top
Mhm.
of that, we have a daily cycle variant. We swept Frankfurt highs and we continued, right?
Mhm.
Now, understanding that we swept Frankfurt highs and continued, what else happened internally? We had a break of structure of current same day internal liquidity, right? Which does
Mhm.
what? Right here, it speaks for continuations, right?
Okay.
Which has allowed us to do what? Take shorts here, right? And continue our move down. So let's keep track of all our moves and all the liquidity entering the market, right? So it's clear that we would have taken shorts here. Now look, there's more internal liquidity. We created a new low, right?
Mhm.
Here's that new break right here. Now, considering our entry criteria, right? We can either trade all the way back to this extreme, right? Where we have produced order flow, right? We want continuation somewhere around here. Or or we can look for continuations right here, right? Remember, we have to look at the candle that caused the break,
Yes.
candle causing that candle to cause the break, and then where the
Uh-huh.
last sweep happened, right? Which would have been here, right?
Yes.
So
Uh-huh.
this in reality actually would have been our real entry point area. Now watch what happens
Mhm.
as I bring this across, right? When we take in that whole OB there, and I bring this across, right? We can see what eventually we had some sort of reaction here and some sort of reaction there. Cool. All right. Now, what else can I understand? We understand that this is internal liquidity from the previous day, right? So this becomes what? Red, right? This also becomes what? Red. Okay, great. Let's keep these in mind for the next day, right? And coming on to the new day, what happens? We swept external liquidity and then we swept more external liquidity, right, during the Asia session.
Mhm.
And it looks like we had what? An entry around here. So let's talk about entries, right? How do I look for entries? We come here, we have a nice bullish engulfing, right?
Mhm.
We can see that this candle is completely closed over this, meaning we can take this entire candle,
Mhm.
It looks like price came in ever so slightly, tapped in and ran. So our first entry for longs would have been right here. Now,
Okay.
considering this, it looks as if this right here is all internal, right? We could have looked for some sort of continuation here, but it looks like we never came back to this extreme in order to
Mhm.
execute that position. Now,
Okay.
what else is going on internally? Here, we're building more internal structure,
Mhm.
right? What's going on? This is gray. We look for continuations. This is gray. We look for continuations, right? It's the same exact thing that has happened over here. Here's that momentum shift, right?
Mhm.
Here's the extreme, right? We want to take the after that engulfing here, right? This OB, right? And we can clearly see what we can
Mhm.
get into buys, right?
Mhm.
Well, as we know, we were in shorts here, right? Shorts, all right, we come break up. We're still in shorts. Why? Because our stop losses are up here. And then what? We
Mhm.
would have flipped right back into buys here. We come all the way back up. We hit these continuations from before. We know to switch back into sells. And then how do we know to re-enter here? Order flow, right? So we actually would get right back into buys here. Then what happens? We come and we break this high. We know we're looking for continuations. It's the same thing. This is the candle
Mhm.
that broke. This is the candle causing it to break. Where was the last sweep? The last sweep of that candle was here.
Yes.
Causes
Okay.
what? More continuations to occur right here,
Mhm.
right? And where are we aiming? Next liquidity pool, right? Our next liquidity, right, is shown where? In red. Now remember, red,
Mhm.
previous liquidity that's internal can act as what? Continuations or reversals, right?
Okay.
Now,
Mhm.
remember I said we now have to use the confluence on our chart to understand where price is supposed to go. Well, considering we're what? In the New York session, right? At the highs of the
Mhm.
day, right? We can already
Mhm.
assume that there's going to be a New York reversal. On top of that,
Okay.
I also understand that we have what? Price cycle inducement, 3 hits intraday to the high, right?
Mhm.
And that tells me right away that we should be looking for shorts. What else tells me that we're looking for shorts? Price is running up a trend line here, right?
Okay.
Because we're
Mhm.
running up a nice little trend line right here, what does that tell me? It tells me that we're inducing buying along this trend line. We need to come take this trend out, right? I also know high
Mhm.
time frame what has happened. Our last major sweep of external liquidity high time frame was right here. My high time frame
Yes.
bias still is remaining short until what? We sweep one of these liquidity points down here,
Mhm.
right? So considering all that, we now know that this liquidity internally is going to act as reversals, right? So I'm sitting here on the 15-minute chart. I see this engulfing. I see this occur, right? So now
Mhm.
what? I go short, okay?
Mhm. Yes.
All right. Now, now that price is coming all the way down into here, can I bring all this into play? Absolutely, right? We saw this is now what? This is now going to be red,
Yes. When you put it red because of the change of the day, and
right? That's exactly why I have the session breaks in. I know it's a new day. I know this is
Mhm.
liquidity from the previous day. I also know it's internal,
Okay,
right?
it's internal, and you're expecting there a continuation or a reversal.
So in this case, right, we were expecting reversals. Why are we expecting continuations here? Well, based on the daily cycle, right, we have just made a
Mhm.
break and retest
Yes.
daily cycle pattern like so here. In
Mhm.
reality, there's not a lot of information for me to really tell how to play these. You have to understand that there's not a lot of information telling us that we can play these. We do know that we are favoring continuations more than anything. Why? Our high time frame bias is still short. We are coming
Mhm.
from more shorts, right?
Yes.
What's also happening? We talk about Asian liquidity. There's a downwards trend line occurring what in the Asia, right?
Mhm.
So that's telling me that there's sellers being induced in the market, right? All these sellers are
Yes.
inducing the sweep of these Asian lows, right?
Mhm.
Then after the sweep of these Asian lows, it looks like we come back up and retest what for continuations. Well,
Mhm.
it looks like this right here was the candle that broke. Where was the last sweep that we had in the market? Right here, right? So we know that if we were to play continuations from this liquidity anywhere here, right, would be our entry point, right? Because this is
Mhm.
that extreme, and I'm just simply taking this 15-minute candle, right? This area right here, this slight
Yes.
engulfment, right? As soon as this candle engulfs, I know this is where I could enter. Theoretically speaking, sure, we would get into shorts here. Now, what's happening? It looks like we sweep more internal liquidity right here, which is what? Gray,
Right.
right? So we can now look for continuations again. This is not a 100% perfect strategy. It looks as if we would have taken a loss here. I have no problem telling you that we're going to take losses. So we would have taken shorts here, gone break even as soon as we tapped liquidity, right? We always go break even as soon as we tap liquidity, right? Well, now that we're looking for continuations, right? We know that this candle caused the break. When you look back up, see where the last sweep occurred. That occurred
Right.
here. We know that this is the candle where we're probably most likely going to enter shorts. I would have entered shorts happily as soon as this candle came and touched. Bunch of traders had different styles than me. A lot of people might have been buying here. This is how I trade and it works, right? We would have clearly made one loss, maybe one BE for the day trading London.
Yes.
It's just going to happen, right?
Yes.
Now what's happening again? We have more internal liquidity, right? And then more internal liquidity here, right? You can clearly see that we've made lows. Now we're moving into what? New York, right? New
Yes.
York's always going to have a little bit more price action. It's going to be a little bit, easier to see, right? So give me 1 second, man. I'm just getting a
Sure.
text. All right. So we see that we have what broken down, right, with this candle, right? This was the candle to cause the break. Where was the last sweep? It looks like it happened right here, right? So we're looking for continuations anywhere from here, right? Why?
Right.
Remember I said, so if you want the most refined entry, yes, it'd be up here. But remember, this was the candle that caused this one to break, right? We
Yes.
just know our stop loss is supposed to be all the way up here. Why do we know our stop loss was really up here? Because this is the last candle that swept. So it looks, so yes, you can start shorting here as soon as we tap into it, but would you? I wouldn't recommend it. We're about to hit external liquidity here. That's a terrible RR. To me, that's a negative RR, right? We just simply wouldn't want to take this trade, right?
Gotcha.
But it's possible, right? We could have taken shorts right here. All right, it looks like this day, the 24th of January, was just terrible. But it's okay. There's still more opportunity. Look what happens. We come and sweep what? External liquidity. It looks like we tap in to this retail downtrending trend line. And it even looks like from an indicator standpoint that we have a divergence, right? I'm going to get rid of this indicator. I don't want you to get used to using it. So we're just not even going to talk about that. What's important is that we swept external liquidity. We tapped in, maybe swept that trend ever so slightly right here, as you can see. And then what happens? We have that engulfing, right?
Yes.
We clearly see that we've engulfed over this body. We can take this as our entry point. What else do we know? We know we can refine it how? We can wait for the sweep of this candle, right? Refine to these wicks, right? And then get entries here. I remember this being like a 1 pip, 2 pip SL. All
Wow.
right, let's take a look. I don't really remember. 3.4 pips. All right.
Until which point would you take? What would be your target there?
I would have targeted for this liquidity here.
Okay.
However, that's from a structural standpoint. From a funding standpoint, I tell everybody this, as soon as you hit 1 to 5, take profit, right? 1 to 10, take profit, right? Like we saw this was 3.4 pips, right? You would have hit 1 to 10, maybe around this area here, right?
Yes.
So you would have
Mhm.
taken profit regardless. I would have taken profit regardless. From a automation standpoint, you're right. We wouldn't have hit our full TP here, unfortunately. But that's okay.
Okay.
That's okay. What's up?
Yes, it's okay.
But look at all the opportunities that are present just in
Sure.
3 days' time with one pair.
Mhm.
And it all makes sense, right?
Yes.
Exactly. All right. All right. So here we go. Here's more structure coming into the market. Here are those continuations that we're looking
Mhm.
for. And then this now becomes what? Red for continuations or reversals.
Mhm.
Considering that we're looking for continuations here, I was primarily looking for some sort of bounce around here. Considering the session timings, right, we wouldn't really be trading this area.
Mhm.
But if I were to take it, I would have taken these wicks, right? And I probably would have started buying right around this area here. Probably would have
Okay.
taken an SL. That's perfectly fine. We're going to take SLs. There's one of those SLs. Now we see that this is coming into play, right? And we know what?
Mhm.
We know what? That this is more likely to be used for continuations. Why?
Uh-huh.
Again, it's similar to what was happening over here. Downtrend coming in, right? Downtrend coming
Yeah.
in, right? So we know we're most likely going to continue. Here was the candle that broke, right? We want to know what? Where that last extreme, where that last cut was, right? Here was
Yes.
the break. Here's the candle that caused the break, right? Here's that sweep.
Mhm.
From a methodological standpoint, it looks like we would have not hit very
Okay.
well on that either. But that's okay.
Uh-huh.
Watch. I remember this. So we would have taken an SL here.
Yes.
But look again. We come and
Mhm.
sweep this candle again, right? Because
Yes.
now this becomes again part of the expanding liquidity, right? SP2.
Mhm.
Well, this
Yes.
candle comes to break. This is the candle that causes the break. This is the
Mhm.
last candle to sweep.
Mhm.
Finally, we're able to get this enter short, right?
Yes.
So yeah, we would have been stopped out. We would have been stopped out and then recovery, right?
Sure. Mhm.
Okay, let's keep moving. We come and do what? We sweep external liquidity, right? I don't want to look for continuations. There's no point. We could have, yeah, you would have hit continuations right here. If you know you plan on doing it, you can trade that way if you truly want to. I don't recommend it. Stick to the rules. We know we're in external liquidity. Wait for that engulfing. We don't have it till what? Here. We would have what? SL'd. First position, right? SL.
Yes.
And then I
Mhm.
remember taking this one and I would put this on my gram, right? I was on the 10-minute. We had another one right here. Finally, boom, back into longs, right?
Sure. Mhm.
But that's pretty much how you could have traded internal and external liquidity, right? With Euro USD. So when I was putting up this entry, this entry, this entry, everybody's calling me fake, telling me I'm not real. But you'll see in your own back testing, right? In your own forward testing, it's gonna work, right?
Mhm.
All you need to do
Right.
is see it for yourself, right? You see
Yes.
my you see my results, you see me live trading, you see it's possible. It's just and you, again, I'm showing you these losses to show you that they occur, right? Like I'm showing you step by step, right? The logic behind everything, right? Like we took losses here, right? But
Mhm.
we recovered here, right? We took losses again, but then we recovered here. We took losses again, but then we recovered, right? We got to be
Right.
okay with taking losses. We have to understand that in order to win, we must lose, right?
Mhm.
It's all part of the process. It really, really is. Now, there are other traders out there who are a little bit more accurate than I am. Sure, I will not deny that, right? I'm extremely aggressive with my trading style, as you can see, right? Like
Yes.
if I were to move or show you some of the text I have with the people I trade the most aggressive out of anybody I know. right?
Okay.
But I
You
tend,
have the confidence.
I have the confidence for it, right? I've been looking at this stuff for nearly 10 years,
Yeah,
right?
sure.
So, with 10 years experience, you kind of want to find every opportunity in the market. It just becomes I guess a somewhat of a quote unquote healthy habit. But
Yeah, sure.
yeah, you can pretty much see all inducements are another way. In reality, inducements are just a more improved support and resistance. It really is,
Mm-hmm.
right? What a lot of communities do is they try and sell you on very fancy words, right?
Mm-hmm.
Like equilibrium, divergence, mitigation, and all these crazy things. When in
Yes.
reality, all you have to do is understand what's going on the chart. You don't need a fancy word to tell you what's going on. You just need to see what's going
Uh-huh.
on in the chart and understand what's going on in the chart, right? I really think if you rewatch this video like 3 or 4 times,
Mm-hmm.
understanding this algo structure, understanding this liquidity is by far the most important piece of the puzzle.
Sure.
100%. This is really where that that money that you're paying me, this is where it's going towards, is really understanding this, right? It's
Okay.
not, entries are not super hard to understand, right? Anybody can understand how to enter, right? Like if we simply just find here's that bearish engulfing, right? It's not too hard to understand that this is your OB, right?
Mm-hmm.
It's more important to understand the direction of the market where it's heading, right? We understand this is all internal,
Mm-hmm.
right? You would know that all this is same day internal liquidity, right? This is supposed to be gray, not red, but you
Uh-huh.
get the point, right? All this is internal liquidity. We're just trading all this order flow, right? Because all this is continuations. And
Yes.
it's funny how we would have known, okay, start taking profit here. We would have started entering short, probably here in Asia, based off of session timings. Time is confluence. Could
Mm-hmm.
have waited for that sweep of the highs one more time, got in again right here.
Okay. Yes.
All right. Um,
How do you look for confluence in the 10, 13, and 15-minute for entries?
all right, let's talk about entries for a little bit. Let's come here, for example. Let's come to another random spot. Here's that external inducement of the lows.
Mm-hmm.
Now, what do we look for on the 10-minute? We look at the price action and we wait for this engulfment, right?
Uh-huh.
I want to see, did this
Regarding the engulfing, do you look for the close of the candle to be higher than the previous candle?
majority of the time, yes. This, for example, just makes it, right?
Uh-huh. Barely.
You can
Mm-hmm.
say that this didn't
It
quite
does.
fully. So let's say that this didn't quite fully engulf the high of the candle,
Mm-hmm.
but we engulfed the body.
Okay.
If we just engulf the body, then just take the body in the lows,
Okay.
right? What is
Got
our refinement to this?
the weeks.
The wicks, right? We can either, oops, we can either wait for the sweep, or we can pretend all this is order flow from wick to wick to wick, and then we get this right here,
Okay.
right? You see that?
Yes.
You see how I put that up? There's two ways of refining it, right? There's no right or wrong answer here because I've seen it happen so many times. I've seen price
Mhm.
come, sweep this, then rocket. I've seen price collect order flow, come here, rocket like it's doing now, right?
Uh-huh.
There's not one
And
way of doing this. I promise you. There's definitely not one way of doing this. If there
do
was,
you split entries?
what's up?
Do you split entries? For example, here, like you divide your risk in two and part with a higher stop loss and the other one aiming lower?
Exactly. That used to be one of my trading styles, right? I would risk maybe 0.25% here, right? Here, and here, right? That maybe add up
Mm-hmm.
to 1%. And that's a good way of thinking about it, is maybe stacking positions. Just trying to get funded and starting out, I wouldn't even worry about refinements. I would just simply take that first position that you get, right?
Yes.
Psychologically,
Uh-huh.
it makes a lot more sense. We can
Yes,
even
because
come in here. We can even come in here and
Mhm.
look, we have that previous day internal liquidity, right? Which is
Yes.
what, red. And we already
Mhm.
know what's going to happen. Start reversing again.
Uh-huh.
It's all textbook, right? And I like to, sometimes it's good to use, this is confluence, right? See if we mitigate something from the past, but we don't need it. We see we have a bearish engulfing here, right? Here's your bearish engulfing. Here's your test into it, right? We noticed our
Mhm.
going short here.
Yes.
I was on a phone call with my buddy last night who I'm teaching, and I'm like, hey, EU, GU, my short. He's like, man, no, it's not. It's going up right now. I'm like, yeah, it is. Look, here's the liquidity from yesterday. Here's that last little high. Here's that sweep. We melted off, right? Same with GU over here. I knew the same exact thing was going to happen, right? I saw this liquidity get swept, and we were looking at it right here. And I was like, yeah, this is going to melt. It didn't melt as far as I wanted it to. It looked like it hit this liquidity here and started bouncing up, but it's just part of it. I unfortunately on GU today, I took some BEs right here. That was my fault.
Yes.
And then I took a loss here, unfortunately. But this was part of the rules, right? Here's that internal part, right? Most of SMC was seeing this as a break, and then they were taking this area and continuing long. That's what most people saw,
Okay.
right?
Yes.
I saw it opposite, right? I saw this as the external sweep, right? So I
Mhm.
decided to go short here. If I held, I would have made maybe 2.5%, which is fine.
Okay.
Then I decided to enter 0.25% in again here as some
Sure.
continuation shorts, and it just didn't work out. It happens.
Sure.
For EU today, I didn't trade EU today. I only traded gold. This was my main hit. I saw manipulation of this trend line right
Uh-huh.
here. I saw all this as order flow. I knew all that order flow had to get trapped, right? I talk about smart money order flow traps, right?
Yes.
I stopped out my first position right here, right? This is that trap. I got stopped out that first time. I re-entered immediately, put my stops right above this high again, and then I took profit right here for 1 to 5, right?
Wow.
So I was pretty transparent today. I told people I took 2 losses, 1 break
Yes, I saw.
and 1
Mhm.
win. I only had 1 win today, but guess what? I still came out profitable. 3.75% for me, you know, for me is still over thousands of dollars. So I
Sure.
don't need to worry, really good. I don't need to worry about getting 10% a day. In the back when I was, the thing is, I know what it's like to be trading smaller capital, and 3.75% is not a lot for smaller capital. But this game is not about how much you can make with a smaller account. It's about longevity. Right? It's
Sure.
being able to know how well can you trade that $500,000 account. Well, fuck it, man. If I can make 1% trading a $500,000 account consistently every single
Yes.
day.
Wow.
I'm making more than anybody. You know what I'm saying?
Sure. Yeah, sure.
That's what matters. Um,
Sure.
I like to talk about these things like in these one-on-one sessions because it's huge, it's important, right? Like
Mhm.
people need to understand that, methodology is 20% of it, psychology is another. I was having students yesterday trading EU, right? And they had the right idea the entire time, right? They were taking long positions here and they got stopped out. They were taking long positions here and they got stopped out. And then they saw
Yes.
this. They saw this. What did you think they did?
They didn't enter.
They didn't enter, right? Because they
Mhm.
got scared about these 2 losses that occurred right here, right? And you're
Yes,
gonna
it
see,
happens a lot because you get 2 consecutive losses and then you're scared and you're thinking that price is going to go down.
boom, exactly. And that's when trusting your analysis really comes into play here, right?
Absolutely. Absolutely agree with you.
Now, I don't encourage more than a 2% loss in a day, right? So for the students that had that in their trading plan, right, they lost 2% here, probably risking 1%. I would say that
Mhm.
it's okay to stop trading for the day. But, if you're somebody with 0.5%, generally I'm one of those people. I generally risk 0.5% per trade, right?
Mhm.
So that means I'm allowed to take 4 losses in a day, right? The
Sure.
minute I hit 4 losses in a day, I'm done, right? I
Okay.
take 0.5%, right? that gives my psycho, like, the reason why it works is my trading plan is I am only allowed 4 losses, meaning I can keep taking shitty, even if it was a shitty trade, I can keep taking them until I hit 4 losses.
Mhm. Okay. And your average week or month, how much are you making at the
It
end? Because
it,
that's
it
what
depends.
counts.
So that depends on what the market gives me, right? You can see here, if I were trading London, right, I would have made, let's see, at minimum 2% to 3% to 4%. Right now,
Uh-huh.
if I were to take the refinement, I made 13%.
Okay.
That's a really hard question for me to answer, right? Like my average win rate, because my average win rate is not going to determine your average win rate. It's just not,
Uh-huh.
right? Your average win rate is going to be dependent on how you take the information that I give you and use it for yourself, right? Like
Okay.
there's 3 people that know my strategy very, very well that I trade with personally.
Mhm.
Yet we all take different refinements and different entries, right?
Sure.
It's all dependent on your psychology, right? That's why teaching this stuff can be really, really, really hard, is because it's really, really hard to get someone to completely copy what you're doing,
I know.
right? We could have even taken shorts here, right? Like these were the break, my fault, the break here, right? We would have taken continuations here, but we also could have what? Taken continuations off of that extreme, right?
Mhm.
Taking it here. I don't personally like doing that, but you could see it works, right? You just have
Right.
to really be patient with yourself. The best way to improve your RR is start small, focus on getting 1 to 3s daily, then start focusing on 1 to 5s, then 1 to 10s. My
Mhm.
focus isn't like that though. I'm not focusing on super high RR, 1 to 10s, 1 to 15s. I consistently go for 1 to 5s, and my biggest struggle as a trader is trading large capital, right? It's nothing analytically, it's nothing psychologically. I mean, it is psychological. My
Yes.
psychological problem is upping my not my risk, but upping my capital, right? Because when I see my account go into extreme drawdown of like thousands of dollars, it scares the hell
Uh-huh.
out of me. So I can't trade larger capital. But then there's students that I have trading larger capital than me because they can handle it, right?
Okay.
But they can't handle trading all of this, right? A lot of those people trading that larger capital are focusing, just on this external liquidity, just getting those main moves, right?
Uh-huh.
Because it's the easiest to track, right? It's simple. There's only one outcome coming out of it. There's numerous,
Uh-huh.
you got to understand, do you want to trade this type of liquidity? Because you can understand that there's numerous outcomes,
Sure.
right?
Uh-huh.
Same with the continuations. Your probability of these continuations are not as probable as this external liquidity. That's why I always tell people, just focus on the external liquidity. Now, are you going to miss a bunch of trades? 100%. You can see over the course of this 5, 6 day period, you would have only
Yes.
gotten, if you were just trading London, one,
Uh-huh.
one trade. That's it. You would have only gotten one trade, trading external liquidity. But look at how successful it was. You could have still been in that trade till down here,
Uh-huh.
right? You got the main move.
And if
Only
you were
trading
trading
now,
New York,
right? If we were just trading New York, we would have gotten this one and this one. Only two
this one.
entries trading
Sure.
external. But still,
Uh-huh.
even so, that
Mm-hmm.
is 2 entries over a course of a week that both made over 5%,
Yes.
right? So hopefully that goes to show, right, that this is good. I'm actually in EU buys right now. I'm in these. Why? Here's that external internal liquidity, right? We had
Mm-hmm.
what? A break of structure of the internal liquidity. So what did I
Yes.
do? I took the extreme.
Okay.
I'm in this right now. I will post it here. Let me post it on my story real quick so I can show you.
Okay. Uh-huh.
Or here I can probably send it to you here in a little bit. All right, hold on 1 second. Let me move my stops to. I'm gonna move my stops to break even. Let me go ahead and post this. So go ahead and go through my story if you want. I'm going to go ahead and post this right now to show you that I'm currently in this and that I truly do see everything that's happening in the market. All right. Let me go ahead and all right. I just posted it. So you can go ahead and
Okay. Well, it's because I'm seeing a lot of them, but I go through them every day, yeah, and it's helping a lot also to catch what you're.
should, yeah, it's a long story, but it should be the very last slide. But anyways, what I'm aiming for here, right, is the top right here. That would be my first TP. So today, right, if this hits, I'm up right now 3.75% on the day. If this hits, I'll make another 4.5%, right? And then I'll have 2 wins, right? Well, at this right now, my worst case scenario is break even, right?
Right.
So my worst case right now is break even. And then on top of that, right, if this comes and hits all the way through, I'm probably going to close full volume here. Right, when I close full volume, right, I should come out with around 7-8% on the day.
That's amazing.
Right, I'm telling you, man, I try and show you guys constantly that this is happening, but it does take a lot of practice, right? Like, but it does work out really nicely. Did today's session help a lot?
Yes.
Good.
Yes, of course.
I really wanted to focus on liquidity today. I know I was supposed to focus on entries, but the reason
Yes.
why I wanted to focus on liquidity is because I've been having a lot of people struggle with it. And so I wanted to make sure you really understand what's going on liquidity wise. And like I said before, man, I would really appreciate if you send me your graphs, right? And see what you're seeing. So I can at least help you out with your progress, see how your trading is going, right? I think you're going to be analytically fine. I really do. I think everyone's struggle, right, is psychology, because it's very difficult to, in real time handle loss, right? A lot of people are not good with handling loss. It really is a hard thing to do, right? Yeah, I just encourage you to, like, show me your losses and then show me your wins, right? Like, same thing that I'm doing with you guys. I want you guys to do the same with you. Because that way, if you show me your losses, I can tell you, hey, man, that was a good loss that you took. Hey, man, that was a bad loss that you took. This is how you fix it, right?
Okay. Yes, I will start posting in the chat, in the VIP chat.
Please do. Those are, because look at, so for example, Stan, he was one of my first students, right? He shows all his analysis and whatnot. He's doing phenomenal right now, right? Some of these some of these guys are doing really well, but it's making sure, like, you're sending me your graphs and stuff so I can help you out, right? I'm telling you, there's no one else in this industry who's really gonna take the time to really work with you day in, day out, right? Like, I'm making this a full-time job for myself, really trying to make sure you guys learn it, especially my one-on-ones, right? I really want to make sure you guys are getting this.
Appreciate it a lot, Ben.
Absolutely, man. It's important to me.
And I really see the difference.
For sure, man.
It's a complete different perspective from the market. Just looking at these external liquidity points and those entries, it's giving me another. I'm taking wins when it was very hard for me to take wins before. But I'm now looking at this internal liquidity and these things that we saw today. I think it will be very helpful also. And as you say, just back test and forward test and,
Absolutely.
And get the confidence.
Absolutely. I want to show you how the market is the same every single week, every single day. If we just look simply at these external points, can you see how it's the same exact thing occurring over and over and over again? right?
Yes.
And it's just a matter, and you can see that you can even treat this as a break of structure, right? Continuation, right? Break of structure, and it looks like we had continuation. Break of structure, and it looks like we had continuation, right? And we can trade
Mhm.
both sides, right? It's kind of neat once it all kind of clicks.
Sure.
And then
And-
we're just looking at a 10-minute, right? And then, I know some people who just look at liquidity that's from the past, right? Like these data points here, like they're just
Mhm.
taking this low. They're just taking this high. And that's perfectly
Mhm.
fine. Time and price is a huge confluence, right? And it can really, really tell you where price is going, right? And especially when we break out of a liquidity pool like this, an injection, and then we come
Yes.
and induce highs like this, well, this sure as hell tells me that's going to go down, right? Like this is
Right.
a ton of confluence right here, right? And then we even have trend line, right? This all needs to get taken out. Boom,
Uh-huh.
falls. Yeah,
I'm just thinking right now, we can say that as we broke the lower liquidity
right. That the market is probably going to go up.
go up.
Exactly.
Uh-huh.
I agree. I agree. And you can see we could have taken entries, right? Those original
Mhm.
entries were, remember, right here,
Yes.
right? And
They're
then,
still holding.
right, and then we look, it gave us another opportunity, which I look, it's pumping for me. I might go hit TP soon,
Yes.
right? I might hit TP in a little bit. Look, gave us
Well,
more.
we have big news at one.
Oh, I really hope it
After.
might run. I'm actually going to hold my position through this, right? Because I believe that we're gonna rock it. Let's take a look at our see if we have a divergence. Doesn't look like we have a massive divergence. What we can do is go on to Dixie and see if there yep. So look at Dixie. See how Dixie is coming down as
Uh-huh.
Euro USD is coming up. I learned this from one of my other good trading friends, recently. This is new to me, actually. I still learn, I still learn, right? I can gladly say, like, I'm perfectly cool with you guys, like, learning from other people too, whatever makes you a better trader. You know what I'm saying? I encourage
There
you.
was a teacher in IAM Academy called John Fibonacci that used to watch the divergence between the XY and the EU all the time.
Right.
Like you just show.
Right.
Uh-huh.
Yeah, bro. But yeah, like I said, like I just whatever I can do to help you with your trading, you let me know, man. And
I'm very, very excited then because I think this is finally clicking a lot. And
I'm glad. That's awesome, man. That's what I want. But like, yeah, stick with this style as long as you can. See how it works for you. If you ever
Yes.
run into problems, first things first, just text me.
Sure.
And I can always also refer other education sources as well that I trust,
Perfect.
right?
Uh-huh.
I got buddies that I trust as well who do this, right? I had one of my reason why I made a post in the VIP community is I'm good friends with another trader and he started a signal group, right? And I guess his signals didn't do so well this week. I think he had 2 losses and 0 wins. And so his community is giving him a bunch of shit. And they're like, hey man, you're not teaching us this and you're not giving out like good signals. And it's just part of the game sometimes, right? Like, you got to be able to understand that, signals, in my opinion, no one should be giving signals. I think it's the most detrimental thing to someone's trading, right? To someone's trading experience. You should only be taking signals if you're already profitable trading. That's in all seriousness. You should only be taking signals if you're already profitable. Otherwise, you're just going to complain about somebody else's signals, right? When you take a loss.
Sure.
There's a good reason why
I don't trust signals at all.
Right. There's a reason why I come here. There's a reason why I give trade ideas instead of signals. Right.
You can you understand the analysis, you can custom it to your own way of viewing it, no?
Right, exactly. You can still build your own individual narrative, and I'm still giving you the information you need, right,
Mhm.
to make your decisions.
Yes, also the analysis you make every day, it's great.
Thank you, bro.
No, you're giving a lot of information. What I think that it's very different at your end is that you're not creating false expectations to anyone. Well, to myself, no?
Right,
You're
exactly.
telling me things as they are. You are showing your losses. It's very hard to find out there are mentors that show their losses, no?
Thank you, bro.
And that's what makes me think that maybe some of them, or maybe most of them, are just bullshit. No,
They're
because
also they're
there's
also
no way
overcharging.
no one have that much losses, not that much wins, no?
Right. I appreciate it.
So,
Yeah.
and what you're doing here is, well, this is because you're very clear. What it's giving me a lot of confidence with you is that you're very clear.
Right.
This is the system. This is the methodology, no, or the edge, however you want to call it. And it takes loss, and sometimes you lose, and sometimes you win, and you are very, like, you're sticking pretty much to the system,
Right.
and
You
that's
just
what it's
you really
important,
have
no?
to be disciplined with this, right?
Mhm.
I mean, yeah, it's always been my goal to beat the market in general, you know. It's funny I say this because most traders will hate me for saying it. 100% majority traders, probably 95% of them are going to hate me for saying this. You have to have a gambler's gut. There's no question about it, right? People who are
Yes,
afraid to take loss, right, are not like there's a difference between gambling and disciplined gambling, right? There are
sure.
people who make a full-time living going to the casinos. I kid you not. I have two friends,
Uh-huh.
full-time poker players.
Yes, I know people. Yes.
Right. They're full-time
Uh-huh.
poker players, and they will say the same thing a trader says. You stick to your plan, right?
Mm-hmm.
And you know when to break the rules. You know when to break the rules and stick to your plan, right?
Well, as Mark Douglas says it in the videos that I posted yesterday, it's a you should look at this at the casino, but the casino not at the gambler's side, on the casino side, when you know the odds are on your favor.
Right.
No? The casino loses a lot,
Mm-hmm.
but at the
Absolutely.
end, it's the one who wins
Absolutely.
because the odds are on the favor of the casino, and that's what you should be looking at, your edge. No,
Exactly.
your edge
Exactly.
will not work all the time, but when it works perfectly fine, and you know you're winning, and that's how you get the confidence, no?
Exactly.
And that's
Awesome.
why you say, okay, it's okay this loss, it's okay this loss, but always if you're trusting your edge and
For sure.
you are following your edge,
For sure.
like
Would you
those two losses yesterday, no?
right? Would you mind if I sent this session out to the video mentorship group?
No, no problem.
All right, I think I think this video, like this session I had with you, would really help a lot of those in my video, like those who are in the video mentorship, right? I normally don't
Okay.
ever send out any one-on-one sessions to those because obviously you guys paid for it, but if it's okay with you, right?
No problem. Then if
Then
I can help the community, my pleasure.
awesome. Then I'll send this out to them because this is I think this was a really good session, right? I think this was a good one. And we can see we're about to hit TP here. It's
Yes,
another good thing. All right, bro. Well,
Amazing.
that's about it for
Well,
today. I think in next session, right, I'm gonna focus a little bit more on the M1 refinements, right? So we
perfect.
talked about how to actually grab entries on the 10-minute, right?
Mhm.
And whatnot. We talked a little bit more about liquidity because I wanted to get really engrave that into your head.
That's
Um,
great.
but yes,
Perfect.
let's go in next session. Let's go a little bit more into M1 refinements, right? Obviously, talk about psychology a little bit more,
Sure.
um, and then perhaps going into added confluences that might help you understand your entries a little bit better, right? A little bit more confidence boost in your entries, type of thing.
Perfect.
Um,
Beautiful.
yeah, bro. Let's
Yeah.
continue doing it. Continue the good
Okay.
scouting, right? So I encourage you to keep sending me graphs and analysis so I can comment on it.
Sure.
Um,
Okay.
yeah, bro. I'll see you in the next
Okay.
session.
Okay. See you next Friday.
Sounds good, bro. Bye bye.
Bye bye.